Good morning, I'm Giuseppe Basile, the trader and technical analyst and blogger at www.fibonaccistalking.com. This is the third of a series of 3 videos in which I provide information on my trading method. The trading method used on the blog classifies a market based on its state. A state of the market is made of the combination of the set of sequences of measured moves modeled on the different time frames using Fibonacci retracements, along with the position of current price with regards to some predetermined levels identified at the time of a trade setup on higher time frames, specifically the weekly and daily charts. This video explains states and their relation to participation in the markets and risk-taking. In the trading method, market is classified in different states, regardless of price direction, which can be upwards or downwards. Market states also reflects a cycle through which the market proceeds. There are different states marking significant events like price inversions or setup, confirmed trend, confirmed target, and target hit. These states are assumed by the market in a cyclical fashion. Cycle duration can vary, and sometimes one or more cycles of 1.5 and 3 months chain up and present within a full cycle of market states. A market state cycle can complete in 1.5 or 2 months, as well as extends to 4 months or more. There are 5 main states in which the market is classified. 2 states mark the event originated by the market reaching a daily or weekly target. These states are 1H and 3H. In such states, the daily trend is temporarily exhausted, but the weekly trend can still be in place. The state 1H identifies the completion of a counter-trend move with relation to the main weekly trend, while the state 3H indicates that a target on the weekly time frame has been reached. State 1U marks an inversion signal or a trend failure on the 4-hour time frame when price is approaching a setup area on the weekly chart. This state indicates lack of backing on the side of bulls or bears to the continuation of the existing trend. Although in this state a price inversion is acknowledged, the new trend that could develop is not yet confirmed. State 2U, in fact, is the state marking the confirmation of the new trend, and within it, relevant levels of support and resistance. However, although identified, the price target is not yet confirmed in such state. Finally, state 2T marks trend confirmation and, along with it, the confirmation of main target for the trade, which is a well-identified price. It is worth noticing that when market eventually moves into state 2T, the state of confirmed trend and price target, programs and professional traders on higher time frames, especially weekly and daily, and who have deep pockets to move the market, will do everything it takes and is necessary, of course following patterns modeled by the rules of the trading method, to move price to the target level. If price does not reach the target level, it means that changes at a fundamental level occurred in the euro-dollar cross, and these changes can be related to macroeconomic conditions or to fiscal policies of the two opposing blocs, that is, America and Europe. Risk in participating to the markets by taking a position to profit from price moves depends upon the state of the market itself. States having higher risk of trading are those marking targets reached, like state 1H and state 3H. In such states, The market has reached a price objective on the weekly time frame, or it has reached a significant level of resistance or support. It is not given to know whether price will continue beyond the identified target price, and no assumption can be made on such circumstance. We know that a price objective, a program and professional trader will take profits. That is, they will remove or close at least partially the position. Therefore, such price targets act loosely as area of support and resistance and cannot be trusted as strong area of support and resistance. However, we don't know in advance whether traders' activity will cause the level of support or resistance in the area of a target price to be violated or respected. Thus, in states 1H and state 3H, risk must be limited to the maximum and no positions are allowed. In states 1U and 2U, where an inversion or a new trend are confirmed, a base risk level is allowed which can be different for each type of portfolio, as I explained in the model portfolios video. Finally, in state 2T, when the market is in a trending state and the target is confirmed, the allowed risk level is the greatest. Clearly, possible price development depend on the state of the market and price dynamics and structure. At every moment, price patterns are studied. Anyway, price changes always respecting the rule set which we use to model program trading behavior. There are different probabilities for different market scenarios, of course. For instance, it is easiest for price to continue in an existing trend rather than inverting it. For this reason, it is paramount to wait the failure of the trend in place on a daily and weekly time frame and wait for the ensuing setup and trend in the opposite direction before participating in the market and initiating a new position. For more information on the rules I follow to manage money and risk in the trading of the euro-dollar cross in my blog www.fibonaccistalking.com, please review the information provided in the blog section under the page Model Portfolios. This is the end of the third and last video of this series on my trading method. Thank you for your interest.